coming. Today we'll be looking at 5 reasons why novice trader lose money. 5 reasons why novice trader lose money, and I'm sure you are going to learn a lot this evening. Yes, so for many of us who are here, we want to get started. Who wants to get started into trading and making money for ourselves? I would appreciate if you pay attention to the webinar tonight as I put you through on 5 reasons why novice trader lose money. Okay. Yeah, so I would like to know where many of us are from. So let me know in the comment section where are you watching this webinar from. Yes, let me know in the comment section where are you watching this webinar from. Okay, so I'm waiting for you guys. Where are you watching this webinar from? Okay. Okay. Yeah. Yeah, I'm waiting. Where are you watching this webinar from? Let me know. Let me know. Let me know. Okay. Okay. Oh, fantastic. Fantastic. Someone said I'm watching from Jigawa. Okay. Okay. Okay, good. Awesome. 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 So good to have you guys on board today, and I really appreciate your time. Okay. All right. So, fantastic. Fantastic. All right. So I'll proceed. So number one, let's look at why novice trader lose money. So I'll be looking at 5 reasons why novice trader lose money. Number one is gamble on chart and not trade. 2 is don't use stop loss and take profit. 3, don't know what is margin and start trading with a small capital. 4 is can't control themselves, that is they lack risk management. Then 5, which is the last one, is don't have their own strategy. Don't have their own strategy. So these are the 5 areas I will be touching this evening, right? And I'm sure you are ready to learn. So first one is gamble on the trade. Gamble on the trade. Okay, yes, I see you. Jeffrey said he's watching from Lagos. Joshua said he's watching from Kwara State, Nigeria. Okay, fantastic. Kazim Olayinka said he's watching from Ikorodu. Okay. Shinemerem said he's watching from Port Harcourt. Then Ignatius is watching from Abuja, while Jacob is watching from Uyo. Fantastic, guys. I'm so glad. Yeah, so we have different persons watching from different cities. We appreciate you. You're welcome on board. Yeah, Akim from Ilorin also. So now we'll go straight to gamble on chart and not trade. So now, number one reason why novice trader lose money is the fact that they gamble on the chart. Okay. Now, many of us want to look at it. Oh, how do you gamble on the chart? What does it mean to gamble on the chart? Let me show us. Let me take us straight to the chart. Okay, I'm sure many of us can see this chart now. Novice trader, what do they do? You know, novice trader would look at it and say, currently the market went up from this level. The market went up from this level. Then novice trader would want to buy right from this level, thinking, oh, the market is going up. Now let's keep buying. But novice trader don't want to know the reason why he's taking a buy on this particular trade, right? Novice trader don't want to know the reason why, and then he just wants to buy because he sees the market going up. But things are not done that way in the market, and that's why novice trader lose their money, because they gamble on the chart. They just follow what they see. They don't understand why market is reacting that way, and what position should they best take. Should they take a buy position when the market is going higher, or should they take a sell position when the market is going higher, right? So this one of the reasons why novice trader lose their money is that what they gamble on the chart, and you don't want to gamble on the chart, because you are here, we are giving you the basic knowledge of why you should understand why novice trader lose their money, so that you don't lose your money next time, right? So now the next one, a quick one on that. So you've looked at gamble on the chart. The next one is they don't use stop loss and take profit, right? So novice trader don't use stop loss and take profit. They want to believe that the market will always obey their order. They want to believe that the market will follow their direction. So a novice trader takes a particular trade and then refuses to put stop loss. Don't forget, stop loss is that order that you give, is like an instruction you give to your broker, telling them to stop you out of a market when the trade you take begins to go against your direction. So your stop loss is like an instruction that you are telling your broker, stop me out of this market. I don't want to lose more than I can bear. That is why you want to use stop loss. But novice trader always feels everything will go in his or her direction, whereas it doesn't work that way. You have to have a mindset of for risk management, where you give room for risk, where the market might not go in your direction, and so you want to edge against the market, and that's why we have stop loss. And it's also important to use take profit, but novice traders don't use take profit. They want to believe that, oh, the market will keep going. If it's a buy, they want to believe that, oh, the market will keep going up, and then instead of them taking profit at a particular point, they want it to go up again, and before you know, the market gets to a higher level. Instead of them taking profit, they did not take their profit. The market now starts falling and then reverses back again. So novice trader miss out of opportunities because they don't use stop loss and take profit. These are critical aspects of the trade. Now let me take you deeper a bit, right, into this trade. Now imagine, let me bring out my whiteboard so I can give you, I can better illustrate it for you. Okay. Now the markets start moving forward. Let's say the market start moving upward here, right? So this is a peak. Now the market now picks up at this level. A novice trader buys at this level, right? Now the market breaks out of this level and goes up. Now the novice trader, instead of the novice trader to have a level where they put as a target level, that target level is your take profit level. You call it TP, right? The target level should have been your take profit level, but a novice trader will say no. He wants the trade to keep going so that he can have a bigger win. why that is good, it's also important that you have a take profit, which means a level where you want to exit the market. But the moment where the market gets to this level and cannot continue breaking through, then it reverses again. So all the profits that you're supposed to have taken out of the market is now cut short. The novice trader now quickly closes the trade in little or no profit. And in some situations again where a novice trader gets to not use stop loss. Let me give a quick explanation on that. So he enters a trade at this level when the market goes up, right? He expects that the market will keep going up, right? And then he buys at this level. Now, instead of him to put a stop loss at this level, that okay, in case the market did not go in my direction and the market reverses back, let me not lose more than I can bear. Let it stop me out of this market. So the novice trader would not put stop loss. Instead of him putting stop loss, he doesn't put stop loss at this level. Then the market drops and keeps dropping further. Then a novice trader will say, oh, don't worry, he believes that the market would reverse. And a day or two, the markets keep dipping. This is one of the reasons why a novice trader loses and loses big, right? And I believe after today, you don't want to be that person. You now know better. You want to do better, right? That's why OctaFX have organized this webinar to give you that exposure into understanding why you shouldn't make losses anymore. Now, before I proceed, I would like to remind you that there would be a workshop, and this workshop would be on the 16th of August. Now, in this workshop, I'll be showing you practical hands-on, strategy on creating a winning strategy. I'm sure many of you have started trading, but it's important for you to understand that you need to have a winning strategy. Then how do you create a winning strategy? On the 16th of August, I'll be showing you at the workshop how to create a winning strategy. Now you might ask yourself, how do you partake in this workshop? Yes, how you partake is this: you need to have a minimum of $100 in your account. When you have a minimum of $100 in your account, you're not paying anybody. That money still belongs to you. But so that as we are teaching you, you are practically getting yourself involved, right? So we want you to have a minimum of $100 in your account, and that $100 is not the requirement minimum. Is not the only amount you can put in your account. You can put in more than that. That's just the minimum requirement to access the private workshop, and this workshop is meant for you. So, and that's why you have to be there. And for you to be there, you need a minimum of $100 in your account to participate. I want to believe that you are getting my point before we proceed, right? Now, if you are getting what I'm saying, let me know in the comment section. If you are following, let me know in the comment section. All right, fantastic. Let's get back to work. Okay, so now I've talked about the gamble on chart and not trade, which is one of the reasons why novice trader lose money. Number two, I've talked about the fact that novice trader don't use stop loss and take profit, and I've also given an illustration of how that can be very detrimental. Okay, three. Thank you very much, Joshua. He said you are following. Awesome. Three, I'll talk about the fact that novice trader don't know what is margin and starts with small capital, right? Now, a novice trader don't know what is margin. Also, Anthony, yes, thank you very much for following. Akim, yeah, you're welcome. I'm glad you're following. Ayo Deji, yes, okay, he said I'm with you. Okay. Titan, awesome. Glad to have you on board, guys. Yeah, let's move. Now, don't know what is margin. Nobody said I don't know what is margin, and that we need to understand what margin is. It's very, very important. Now, margin in forex is a good faith deposit that a trader puts up as a collateral to initiate a trade. Now, what margin don't mind the big grammar. It's just as simple as saying your deposit. Your deposit. Don't forget we said when you want to attend the workshop, you need $100 deposit, a minimum of $100 deposit to be a to be a beneficiary of that workshop. And that's why that $100 minimum deposit, is your margin, right? Is your good faith deposit, like what you want to use to start a business. Okay, now let me explain it this way. You want to start a business, you want to open a salon, right? Okay, you want to rent a shop, you want to get your equipment, you want to get the gadgets, and you need some money, right? That money, which is capital, is what you need. That capital that you want to use to start the salon business is what we call margin in forex, right? So your margin, your capital, is what your initial deposit, your deposit, what you use in taking position, in opening a trade, in initiating a trade. That capital is what we call margin, and it's very, very essential in forex because you cannot make money without money, right? You use money to make money. So when you have funds in your account, a minimum of $100 in your account, that's your margin. So you can be able to cover positions. Are you getting me now? Awesome. Hope I'm not fast. Hope you're following my pace. Hope you're learning a lot. Hope you're getting the gist. Okay. Awesome. Okay, Golden said, okay, don't worry, we'll get back to you, Golden. Okay, awesome. Yeah, so now, as I've illustrated here, let me show you something. Okay, awesome. So, this is a margin requirement of $200, right? Now, you also need to understand a leverage. Leverage is that borrowed money. That's how I put it. It's a borrowed money. So you are using a smaller amount to cover a bigger position. That's leverage. So for those who have started trading forex, you must have been familiar with this ratio: 50 ratio 1, 500 ratio 1, 100 ratio 1. I believe that you must have been familiar with this ratio. So this ratio is called leverage, right? I'm explaining it alongside margin so that you can all grasp it. Now, when you use a bigger leverage, which means you are borrowing more money, you want to open bigger position, you want to have the opportunity to cover bigger positions, right? So now when you have $200 cash in your account and you are using a leverage of 50 ratio $1, which means you have the ability to open a position that is 50 times your deposit, your margin. 50 times your margin. So now 200 times 50 is $10,000. So which means let me use Kazim. Kazim is following also. So let me use Kazim. Now, if Kazim deposits $200 in his account and uses a leverage of 50 ratio 1, Kazim would have the ability, his account will have the ability to cover a position worth $10,000. Right? Now, if Kazim increases his leverage to 500, so imagine if Kazim now uses 500 leverage, which means that Kazim would have an account that is 500 times this is initial capital, right? So which means Kazim would now have the opportunity to cover a position size of $100,000. Massive, right? But do you know that the bigger your leverage, the more risky you have exposed your account to, the more risk you expose your account to. So when you use a 50 ratio 1 leverage which is 10,000, which is 50 times your initial capital, right? You'll be risking lesser than someone who uses 500, ratio 1 leverage. Do you get it now? Whose account can carry a $100,000, position. So the two traders now, one using 50 ratio 1 and the other using 500 ratio 1. The one using 500 ratio 1 has the ability to lose his funds quickly, faster than the one using 50 ratio 1. Do you get that? So now that is leverage. You right? Now, if you don't understand margin, if you don't understand leverage, you will keep losing money. You will keep losing money. And that is why novice traders have been losing money. But that is not you again, because you are part of this training. You're part of this opportunity we are sharing with you, right? Awesome. Okay. Awesome. Let me get back to work. Okay. Now, let's go to the next one. So let's take this example of leverage and margin, right? Okay. So imagine, let me get my pen. Imagine, I'm gonna use Kazim and okay, Jacob said I understand. I'm gonna use Kazim and Jacob in my illustration. Yeah, we haven't gone far. Avzan, we haven't gone far. So I'm gonna use Kazim and Jacob in my illustration. So Kazim, right? I'll use that 3-letter word. Kazim would be trader X, while Jacob would be trader Y. Right? I want you guys to follow me. Okay? Now, Kazim and Jacob both have the same amount of margin in their account. Right? Kazim has $10,000. Jacob has $10,000. Right? Now, I want you guys to follow me, right? So you can have a full grasp, right, of what I'm talking about. Okay? Now, the total transaction carried out, Kazim, if you look at it, Kazim used 50 ratio 1, which is 50 times his account, right? 50 times his account is $500,000. Then Jacob used 5 ratio 1 leverage. See, Kazim used 50 ratio 1 leverage. Jacob used 5 ratio 1 leverage, which is 5 times his account size. That is $50,000. Don't forget, they both have the same margin deposit, $10,000, $10,000. But then they used different leverage. Kazim is using 50 ratio 1. Jacob is using 5 ratio 1. Alright? Then the both of them lost 100 pips. Right? 100 pips. 100 points. The both of them lost 100 points in their account. Right? Then, which is 100 points of pips was lost. In dollars, Kazim would have lost $5,000, while Jacob would have just lost $500. Why Kazim has a 50% drawdown? While Kazim's account is 50% down, Jacob's account is 5% down. While Kazim would have 5,000 balance in his account, Jacob would have 9,500 balance in his account. Jacob would recover quickly, but Kazim would not. Right? So now, if I'm going to ask you, okay, if I'm going to ask you, what type of trader do you want to be? You want to be trader X, which is Kazim, or you want to be trader Y, which is Jacob? Let me know in the comment section. Do you want to be trader X, Kazim, or you want to be trader Y, Jacob? Okay. Someone said, he said, I when I opened my account with OctaFX, this is what I was given. Okay, 500:1, and I deposited $150. I blew the account in 2 days. Too bad. Yeah. You are not given 500:1, right? If you check very well, you are given the option. You are given the option to choose. So that 500:1 is just there as a default leverage, right? And that's why we are training you. We are giving you that knowledge, so you can literally go back and change it. You can change your leverage. You can reduce your leverage. You can increase your leverage, right? I advise you use your leverage should be in line with your account size, your margin, right? Okay. Awesome. Joshua said trader Y. Jacob trader Y. Oh, yeah. Anthony is being sincere with himself. He said, I am trader X, but I wanna be trader Y now. Awesome. Yeah. You can be trader Y now. Awesome. Better to be trader X at the beginning and graduate to trader Y as you master this trade. Okay, fantastic. Okay, someone said, I would love you to expatiate on the advantage of 50:1 over 5:1. I would prefer trader Y. Of course, it's obvious, right? It's obvious. Okay, let me just clean up this. Now, I want to answer Ignato's question. Now, your question says you want to know which is of more advantage. Of course, it's very obvious. Now, you look at trader X, right? Trader X is using 50:1. Trader Y is using 5:1, right? The both of them have the same account margin, right? But now they both took a trade and they both lost the same pip. They both lost the same pip number, right? Then, though they both lost the same pip number, but they took a different risk. Trader X, was using an account that is 50 times his initial deposit. 50 times his initial deposit of $10,000 is $500,000. Why trader Y is only using 5 times his initial deposit, which is just $50,000, right? Now the both of them lost 100 pips. Now 100 pips equivalent to the risk level they took, which is the leverage and the lot size they took. Then trader X is losing $5,000, while trader Y is losing just $500. So trader Y would recover more quickly there, but trader X is 50% down. He might struggle or end up blowing the rest of his account. Alright? Hey Muka, you don't want to be trader X, right? You don't want to blow your account. You don't want to be 50% down. And that's what I've just explained now, right? Okay, so we proceed. Awesome. I want to believe we are following and we are getting the point. Okay? Now, don't forget, on the 16th of August, we are having a private workshop. A workshop, that is open to people, is open to everyone, right? The workshop is open to everyone, but there's a requirement for it, and it's very very simple, because I know that you are well able, right? Now we want to teach you, you know, we want to hold you by the hand and teach you, so you can practically get involved, and and start making money. So for you to be part of that workshop, you need to have a minimum, just a minimum of $100 in your account. Then once you have that $100 in your account, it's for you, so you can trade with it and get to practicalize what we taught you at the workshop, right? So that is only what you will need, a minimum of $100 to be a part of the workshop, right? Also, so now the fourth one I'll talk about: novice traders can't control themselves. Can't control themselves. Do you know something? I'm sure many of you would have experienced this, as a novice trader. It's the fact that many of you, you know, you you would always want to be in a trade. That's one thing about novice trader. They are always eager to be in a trade. They want to take a trade. They want to be in a position. They want to, they want, you know, it's like they have the entire market. They just want to be moving along with the entire market, right? Yeah. So that's why novice trader, because of you are anxious. You can't control yourself. You can't say no. I'm not taking a trade now. I'm gonna wait for a valid opportunity to show up. I'm going to control my eagerness. I'm going to control myself from just picking trades, right? So a novice trader needs to control themselves. If you can't control yourself, you'll be jumping at every trade, and before you know, you'll be losing money. You'll be losing money consistently. Don't forget, it's not about the quantities of trades, it's about the quality. So you can take one quality trade and you win. But if you take multiple trades that are not quality, just quantity, you lose big time, and you lose big time, right? So you need to control yourself as a novice trader. That's where risk management comes in, psychology comes in. You want to put your mind in a state where you are in charge. You're not just eager to take positions. Oh, Anthony, don't feel attacked. Don't feel attacked. It's just we want you to know what is really how do I put it now? What is really the issue? Why you are losing money, and why you shouldn't anymore? It's because we are interested in you not losing money. That's why we are showing you this. That's why we are telling you this, right? And you don't want to lose money again. I'm sure you have been exposed. You are learning so much from the webinar. And I want to encourage you, everyone, don't miss the workshop. I will be showing you secrets, strategies, ways via which you can create a winning strategy. You don't want to miss it. I'm sure you want to keep making money from Forex. You want to understand the market. You don't want to miss the workshop. See you on the 16th, right? I want to see everyone. I want to see Samuel. I want to see Anthony. I want to see Salem. I want to see everyone, right? Okay. Yeah, I understand. This is for me. Awesome. Yeah, indeed, it's for you. Indeed. So now you want to control. Novice trader can't control themselves. And from this moment on, you want to control yourself. So lastly, novice traders don't have their own strategy. They don't have their own strategy. Have you seen? Of course, let me not even say have you seen. Most of you, some of you, you have your personal experience already, where you jump from one strategy to the other, you are looking for what works, and or you juggle so much strategy into your brain that you are even absolutely confused. You don't even know which one works for you again. Because of course novice traders are always so anxious, and they don't want to sit down and develop their own strategy. I understand, it's not easy, because you don't have anybody telling you the truth, and that's why we have organized this webinar. We want to show you how to develop your own strategy. Yes, how to develop your own strategy, and that's why we have the workshop, that is coming. In that workshop that is coming, we are going to be showing you how to develop your own strategy. Of course, let me just give you a quick steal into what we'll be talking about in that workshop. We'll be talking about you knowing the type of trader that you are. We'll be talking about you understanding your time frames that is best for you. We'll be talking about what currency do you trade best, right? We're talking about determining entry levels and exit level. At what level do you know that you should enter this market? At what level do you know that you should exit the market? Then we'll be looking at candlestick patterns that you need to understand, that you need to look out for, right? Then we'll look at chart patterns too. We'll look at what are the risk to reward ratios you should have in your mind, regarding your account size and the likes like that. You don't want to miss the workshop, right? I'll be rounding up soon, but then this last one, which is novice traders don't have their own strategy, is what is killing so many accounts, and that's why we set aside the workshop to settle that score, right? We want to settle that score at the workshop, where we would unveil to you how you can develop your own personal strategy, what works for you, right? What works for you. Okay, awesome. So these are the 5 reasons why novice trader lose their money. Like I've explained, number 1, they gamble on chart and not trade. 2, they don't use stop loss and take profit. 3, they don't know what is margin, and they start trading with small account size. Then they can't control themselves. Novice traders can't control themselves. They lack risk management. Then lastly, they don't have their own strategy. Novice traders don't have their own strategy. So I'll be rounding up here. Any question? If you have a question, kindly ask your question in the comment section. I would appreciate that. I'm willing to answer you. I want to hear from you. Yes, okay. If you have a question, kindly ask your question. Kindly ask your question. If you have any question, kindly ask. Yes, use the comment section and ask your question. Okay. Yeah, okay, Akim, you're asking what is the active trading hour during the day? Yeah, I'm going to answer that in our workshop, right? I'm going to answer that in our workshop. That is where you understand how to develop trading strategies that is best for you, right? I'm going to answer that in our workshop. Good, yes. How to make strategies. That's what we'll be handling in our workshop. Yes. How can we get invite for the upcoming webinar? Of course. Okay, so you would see the link in the description where you get to register for the next workshop. However, you would need to have a minimum of $100 in your account to be able to be a partaker in that workshop. Okay. Okay, Ibukun said, please explain the leverage again. Okay, Igniter said, thank you, sir. I've gained knowledge this evening. Would love to know more on how to start trading. Yes, to know more on how to start trading, join us in our workshop next week. On the 16th of August. And then have minimum of $100 in your account to be a partaker of it, and then you get to know more. Not just to know more, you get to win more. You get to start making more money from forex. Okay, what happens if I don't have up to $100 in your account? Oh, we would love you to have $100 in your account, because that is the minimum requirement to be part of that workshop, right? Good. I know you are interested. Yeah, show us more that you are interested by having a minimum of $100 in your account. That shows that you are ready. We talked about it. Don't forget, we said, why do novice traders lose money? They don't. Look at the point I drew out here. It says they don't know what is margin and start with a small capital under $100. So if you have $100 in your account, you shouldn't even be trading, right? You should have a minimum of $100 in your account, then you are ready to kick off, right? And that's why we are here for you. Okay. So you need to get a minimum of $100, right? Okay, you need to get a minimum of $100. Awesome, awesome. Can you hear me clearly? Can you hear me clearly? Um, okay, he said, please, how much is a dollar for? Okay, so a minimum of $100 to be partaker of that workshop. If you have more funds, you want to start with a bigger fund. Of course, it's well open to, you can start with it. Yeah. Okay. Awesome. Now let me quickly address the issue of leverage coming from um, the person who asked the previous question, which is Ibukun. So let's go to leverage now. So I was talking about leverage. Now leverage from here, I said leverage is that opportunity to borrow more funds so that you can cover a bigger position than your account size, right? So now this person has, okay, so Ibukun, let's assume you open an account with $200 and you are using 50:1 leverage, which means you'll be given the opportunity to use your account to trade 50 times your deposit. That's $200 times 50. That's what? $10,000. Do you get that? $10,000. You'll be given the opportunity to cover and trade with. Good. So that's leverage. Okay, that's leverage. Awesome. Hello, can you hear me? Huh? Okay. Okay, fantastic. Fantastic. Okay, awesome. 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 Oh, okay. You need to interface with the you need to interface with the platform, right? Yeah. So the exchange rate is not fixed. Okay. Let me see who else is asking the question. Yes, of course. We are going to you, so that you can develop your strategy while I'm teaching you and start trading with that strategy. Right? Awesome. That's why we want you to have your account funded. Okay? Okay. All right, guys. I really appreciate your time. Thank you for showing up at today's webinar. We'd love to see you on the 16th of August for our workshop. Don't forget the requirement a minimum of $100 to be part of this workshop, where I'll be sharing with you how to create a winning trading strategy. A winning trading strategy, because that is what you deserve. You deserve to win, right? You deserve to win. So thank you very much, guys. Thanks for showing up today, and then we'll get back to you. We'd love to see you in our next workshop. We appreciate. Thank you, and bye.